Oops.
And we are live, Dave. We are on. Dave, I'm so
Right.
happy to have you on tonight's show. I just want to say happy Wellness Wednesday to everybody out there that's watching, that's going to be joining us tonight. We have a few different topics that we're going to talk about. Uh, you're definitely an expert in all of these topics. So I want you to be able to share this knowledge because that's what it's all about.
Mhm.
Having this information and being able to share it with others. So I just want to give people a couple minutes to come on. But Dave, it's good to see you. We've been
Oh
long term friends for a while.
yeah. I don't
Yeah.
even know how long. That's when you know it's a long time.
Yeah, you can't even think about how far back.
Yeah.
So, well, we first met through road management, right? You were
Hmm.
Latoya's manager
Hmm.
at the time. So, and of course, I was friends with her, and then all of us, connect, especially through music, which I think is something we all still love,
Oh
even
yeah.
though we're not talking about that tonight. That is something that united all of us. So, Dave, would you like to just briefly introduce yourself to the audience? What it is that you do, the name of your business, and what that consists of.
Yeah, absolutely. Well, first of all, I want to thank you for having me on the show. Um, I appreciate uh, all of the good words that you just said about me. Um,
You're
and
welcome.
I'm glad that I was able to have time to do that because this is a very busy season for me. Um, but yes, my name is David Sweatte. I own a small tax preparation company, uh, Legacy Tax Services. I've been in business since 2004, so I have a
Mhm.
little bit of time in the business. I
Mhm.
specialize in the tax services, um, some financial planning, business accounting for I have business clients, um, also business setups, and just financial advice as well.
Right.
Um, I currently, I held a Series 6, Series and 63 for investment, um, I guess,
Mhm.
retirement investment services. I no longer do that, but I still can provide advice. I still do it. I just don't do it for a fee.
Oh, okay. So you still do it.
Yeah, I'm no longer allowed to collect a fee on it because
Oh
I
boy.
had to surrender a license. Because in
Okay.
that business, you have to. They don't allow individuals to hold the license.
Mm.
You have to be represented by a company. And
What to do retirement?
to yes, in order when
Okay.
you hold an investment license like a Series 6 or Series 7, you pretty much
Hmm.
have to be contracted with the company that is
Okay.
able to bond, basically bond you. Um,
Mm.
and I kind of like when you're working with a company like that,
Right.
um, they want you to push their products, and it's not always the best thing for each one of my clients. And I'm all about
Mm.
for my clients and not trying to just sell a company's product.
Right. Yeah.
So,
I know you're not like that.
yeah. So I got
Hmm.
out of that business. I still hold
Okay.
all my insurance licenses.
Hmm.
So I'm still kind of in that business, but I'm just not as active as I once was. But
Right.
when someone needs something, I'm able to get it for them.
Yeah, you definitely are.
Hmm.
One thing I want to talk about tonight and ask you about is because I hear all the things that you are involved in. Can you just talk to the viewers about the value of having like a financial advisor around, or so or CPA as you mentioned, or
Hmm.
someone that does the life insurance? You want to talk a little about that?
Sure. I'll start off by saying this.
Hmm.
You have specialists for everything that we do. You know, a lot of people say, look my hair right now. Um, why don't you cut your own hair? You save a lot of money. And I'm
Mm,
like, I'm scared to cut my own hair because
right.
I'm afraid of how it's going to look. So I have
Right.
a specialist for that.
Right. That's
Um,
true.
um, I could do a lot of things, fix a lot of things in the house, but I don't mess with plumbing. So if I need a plumber, I'm going to call the plumber.
Right.
Because I'm not going to have like water main breaks or whatever. And
Right.
I'm
I
not
know
going to
what you
have
mean.
a big mess. So I equate, having a financial advisor and having someone take care of these things for you as like, having a specialist do
Hmm.
these things, because there's going to be, obviously there are things that we can do for ourselves, but there are going to be some things that we may not know.
Right.
And there, having an expert, or
Yeah.
even not an expert. I like to say, I don't even like to use the word expert, but a specialist, someone who
Specialist. Hmm.
specializes in that subject. Um, it could save you a lot of time, money, and headache.
Yeah.
you know,
Yeah.
because someone who's a specialist in something may know ways of doing things that you may not be able that you may not have access to.
Right.
Right. And I believe that, like I specialize in doing what I do.
Yeah. You're definitely a specialist.
Mm-hmm.
I feel like you're a specialist in a few different areas. But what's your main specialty that you would advertise as far as financial specialism goes?
Okay, so I think that, yeah, I'm glad you say it in many different aspects.
Hmm.
So we have taxes, we have financial services, and we have what I like to say, um, tax prep, which is
Okay.
not preparing, like me
Hmm.
actually preparing taxes for people, but me putting people in position where um, they're not worried about the IRS at the end of the year.
Right.
I believe that being able to be on both on all sides of the spectrum, like financial
Hmm.
services involves like retirement services. So being
Right.
putting yourself in a good position to retire starts with how you save your money, and
Mm.
how you have money taken out of your weekly or biweekly pay.
Right.
um, it starts there, and that also ties into the amount of taxes that you're paying now.
Hmm.
um, what a lot of people don't know is that there are ways that you could save on paying taxes now. Of course, you would have to pay taxes later on when you retire, but if you use these different methods, you'll have um, you're going to be paying less money in tax, like in retirement, than you would now.
Hmm.
um, so for example, like we have 401ks, 403bs.
Right.
um, Putting money in that gives you a tax break right now. Now you do have to
Hmm.
pay money into that later when you take taxes out, but they're designed so that they know that your income is not going to be as much, so you're going to pay less
Hmm.
taxes later on. And it helps save right
Hmm.
now. Another thing is, like, a lot of my clients um, that come to me, let's say they owe money for taxes,
Right.
preparing. Well, there's things that we can do right now. Right now we're in March. There's things you could do right now to make sure that
Yes.
the IRS is satisfied. You don't have to worry about them at the end of the year. Um, so I
Hmm.
give a lot of advice on how, let's just say you get a new job and you have to fill out that W-4, which is very
Right. It's confusing. Yeah.
it's very confusing now since 2017 when they changed it. Um,
Hmm.
so I help people fill that out. A lot of people think that they have to take everything on that form literally,
Mm.
when really that form is just a precursor of how you're going to be filing taxes. So that's one thing that I try to help my clients out with as well.
Yes, and I was going to ask you, one of my next questions is why use a tax accountant
Why?
for taxes.
Um, just because a lot of people, when they go to do taxes themselves,
Hmm.
they'll see the commercial for TurboTax. You file your taxes
Right.
for free, and
Hmm.
you go on TurboTax and you'll file it. But um, you may not understand some of the things that are being asked of you right there.
Yeah.
You know,
Sure don't.
and what they don't tell you is the free version doesn't give you access to some of the forms that you would need if
Mm.
you have more complex taxes. So it is
Okay.
good to use it for it is good to use things like that if your taxes are, hey, I got one W-2, I don't have any kids, I don't have any deduction. Okay, yes, it
Right.
is. It probably is a good thing for that. But when you have kids, there's different credits that you can get credited into your account. There's different deductions that you may not know about.
Right.
A good tax accountant will um, not only apply for these credits for you, but also explain
Mm-hmm.
to you what they are and give you a better understanding. Um,
Mm-hmm.
so I think it's important. Like I think that's why someone would use a tax accountant to make sure that you're getting everything that you're qualified to get. You may not get that on your own.
Yeah, because as you mentioned, it can be a bit complicated.
Mm-hmm.
Even for people that, like you mentioned earlier, being CPAs, it's confusing for them at times.
Yeah, the
And
tax
and,
it's
and this
always
is what they
changing.
do every day.
Mm-hmm. Yep, it's always changing, and most the
Mm-hmm.
regular the average person doesn't keep up with it.
No.
They just think, and it's funny. I hear this a lot. Well,
Mm-hmm.
last year I got this, but I'm like, well, I always
Right.
tell people, well, that was last year. you know,
Right.
things can change within a year, just like that, and it's forever changing. So, unless you're going to keep up on those changes, it's best to have
Mm-hmm.
someone that actually does.
And it's, as tax accountants, is that all that they normally just focus on? Or
So,
is it best to, if you say you are a CPA or tax accountant, for that to be the only focus that you have? Because people think of taxes as just a seasonal thing, but this is something that you could do all year long, right? As a job or a career.
yes. So I'm not a CPA.
Mm-hmm.
I never sat for the CPA exam. To be a CPA, you have to take 3 rigorous exams.
Mm.
Um, one of them being financial accounting and reporting. So that's just basically just the basic job of an accountant. You
Right.
know, the second part of the exam is auditing and attestation, I think,
Okay.
and that's basically like tax. Sorry, not tax, but just accounting
Mm-hmm.
regulations and
Mm-hmm.
the generally accepted practices of an accountant. So you just need to know, like, it's like the ethics and things like that. And then the third part of the exam is taxation.
Okay.
So to
Mm.
become a CPA, you have to sit down for those 3 exams, and you have to pass all 3 to be considered a CPA.
Mm-hmm.
Um, to me, obviously, I'm not an accountant at all.
Mm-hmm.
I don't do any accounting. And I have some ways that I can help the average person, that's in business for themselves, become like their own accountant. But I'll share that later.
Yes. Yes.
Um, I only focus
Mm-hmm.
on the taxation part. So since I
Mm-hmm.
did not have a desire to go into accounting and to be keeping records for a company as a
Right.
daily job,
Mm-hmm.
taxation is the only thing um, that I've been doing. So one thing that I
Okay.
will say is that I am in the process of working on becoming an IRS enrolled agent, which is
Mm-hmm. Mm.
basically the
Okay.
same thing as what I'm doing now, but I'll be able to represent my clients in a much
Mm-hmm.
different manner than I am now, because
Okay.
I'll have like a legal standing with the IRS then. I mean, not that I don't now, it's just that
Mm-hmm.
um, enrolled agents are more recognized as it's like a certification, you might as well just say.
Right. But do you have to go to school for that? Or you could do it,
No.
from
Yeah.
home?
Yeah.
Okay.
Yeah. I have you have to have experience, and you have to apply that. Basically it's taking a test as well.
Okay.
So it's like I have to really buckle down on all of my tax law.
Mm.
I'm very versed in that already.
Right. That's true. You are.
But there are some general things, obviously, you know how it is with certifications.
Right.
You're
It's a lot that comes with it.
very wide, but in real life, you may not need to know all of the things. So
Right. That's true.
the hardest part for me is, taking the knowledge, my everyday knowledge and real life
Hmm.
knowledge, and basically broadening, to make sure that I'm able to get certified. That's it.
Right. And I'm sure you'll do fine with that.
Oh yeah. I've never, if I could pass that series 6,
Yeah. It sounds like it's a challenge
oh yes,
doing that.
but this is something that I have, I've been
Mhm.
wanting to do it for the last few years. I just never took the time to do it, but I'm going to do it.
Right.
Yeah.
No, I definitely wish you luck with that. But you already know how to, prepare yourself. Like you said, you already have experience.
Mm-hmm. And
So that
like
helps.
just to ease, some people's mind, I have to certify myself in tax preparation every year anyway with the IRS.
Mm,
And they make us
wow.
continue in education. So there's, I'm not the type of preparer that's going to go in there and not be completely registered. I do have a
Right. That's true.
business, and I am certified with them to actually prepare it and electronically submit returns
Right.
anyway. So,
Hmm.
you can't just do that without going through the proper channels anyway. So it's just that this is just
Yeah.
something I really don't need to get it, but it's just something that I want to get.
Yeah. And I'm believing me. I trust in you.
Mm-hmm.
People may not, be aware, but yeah, Dave handles my taxes as well, and it always comes through. You handle it for my mom as well. So I know she appreciated, what you have, did for her and for myself as well. So you always make sure my, on the queue productions is involved, and there's some way that I'm getting some, money back, regarding what I spend, on business for that as
Mm-hmm.
well. So thank you again for that.
Mm-hmm. Oh yeah, my pleasure.
And I wanted you to talk some more about like any like misconceptions that you hear people have about taxes, because um, as you just mentioned with the W-4 form, it's confusing for some people, and people don't know if they, if they should put down the number one, or they should put zero, or like you said about the child tax credits, they get confused about that, which is why I brought the question up before about the value of having a tax accountant around and a financial advisor, someone that could help you navigate all this confusion.
Okay. Well, let me ask you a question before I talk about that.
Hmm.
How much time do you got?
Are we
Misconceptions.
talking literally
uh,
relative? I don't know.
Misconceptions.
Just some,
And
a few that you're aware of, and that when people come to you and you're like,
yeah.
people still believe this. So,
Oh yeah. So I'll try to narrow this down to, let's say, 5 of them.
okay.
I get a lot. There's a lot of misconceptions, and um before I even go into that, I'll say
Hmm.
this. The way that the tax code is written, and if you sit and read it, um it's written so that the average person is going to be confused.
Mm.
And I think that is purposely done.
Mm-hmm.
So like it seemed like, when you try to get answers from the IRS publications, a lot of they like to leave things
Mm.
very vague.
Yeah.
So you're not getting a solid answer on a lot of things. There are some things where yes, you're going to get a solid answer, but there's some things where you don't really get a solid answer. So um,
Hmm.
it kind of I think it's meant to confuse people. But that's a long conversation.
Yeah.
I'll just say this one first misconception. First misconception is people that own homes here.
Hmm.
homes that they live in,
Right.
believe that, hey, because I have a house, I can deduct anything that I do to this house off my taxes. Big
Right.
misconception. Like, yeah, if you make repairs, upgrades, I should get a deduction for that.
Right.
So the misconception here is that, yes, that's legal to do that.
Mm-hmm.
No, I'm not going to say that it's illegal, but you cannot deduct repairs, or
Okay.
you can't deduct upgrades to your home while you're living in it. Now, when you sell the house and you make a profit on the house, and you want to reduce what the profit is, anything that you did while you were living in the house will then become deductible. So
Okay. Wow. Okay.
if you made a $200,000 profit on the house, now any upgrades that you made during the house, will come off of that profit. Now, obviously, there's a 5-year rule where you can reduce the whole thing as well. But let's just say you weren't, that you were out or inside of that 5-year rule, and you sold the house. Well, those repairs and those upgrades can then reduce the amount of profit that you made, so it can reduce your capital gain on a house.
Okay.
Now, if you don't live in a house and you're using it as a rental, the rules are a little different, because now you can deduct repairs, because technically that's a business. Because now you have to report the rent that you're collecting from the house.
Right.
Now repairs and things like that can be deducted because they go against the rent that you're collecting as income. So that's one big misconception there. Now there are some things, like if you put solar panels or if you made energy efficient repairs, there are credits that are available. They're not deductions.
Okay. Right.
Credits that you can get for the house that you live in. And I think I should just mention this. A lot of people don't know the difference between a deduction and a credit when it comes to your tax.
No, I don't either.
So deductions reduce the amount of income that you have, so it lowers your tax liability, like the amount of money that you your income that you have to actually pay tax on. And I apologize for my son in the background if you hear.
It's okay.
Credits are things that you apply for that it's just cash that's given to you. So for example, let's just say you made $20,000. It doesn't work like this, but just to help you understand. You make $20,000. Now you have to pay tax on that $20,000 of income that you have. If you have a deduction, if you have a $2,000 deduction, now you only got to pay tax on $18,000 because you deducted $2,000 away. If there was a credit, if you were applying for a credit and you had that same $20,000 and there was something that gave you a $2,000 credit, well, you would still be paying tax on that $20,000 there, but you will receive $2,000 toward your balance or toward your refund as a credit. So the credit is just straight cash. Deduction is reducing the amount that you got to pay tax on. So that clears up another misconception there.
Yeah, it definitely helps.
Now getting to that W-4 form.
Yes.
The one thing I'd say the biggest misconception when it comes to the W-4 form is how you fill it out. Now, I'm married. Obviously my wife is married. I was going to say something stupid. Yeah, we're both married, and we both know we're married. So, so when I file my W-4 and when she files her W-4, what do you think that we put down as on our W-4?
Would you put both? That you're married, or
neither one of us
do?
Okay. We put single. Now the new W-4 says single or married filing separately, so it's the same thing.
It's the same thing.
and it has head of household, and then the other one
Mm-hmm.
is married filing joint. We don't put married filing joint.
Mm.
And there's several reasons why. My advice, like, I don't want to tell people what they should do.
Right.
And I say this to my clients all the time. I don't want to tell you what you should do, but I'll tell you what's going to happen if you do this, and then you make your, mind what you want to do.
What you want to do?
Um, but the W-4 is basically, it's not. A lot of people think that the W-4 is going to the IRS. The W-4 does not go to the IRS. The W-4 goes to your HR department or whoever's doing your payroll.
Okay.
It's, you're telling the person or the department, whoever you're working for, that I want you to prepay my taxes for the year. Now, the IRS only collects taxes one time a year, and that's April 15th. This year is the 18th. They collect it for the previous year, that one time a year. When you're paying during the year, you're actually prepaying what you think you're going to have to owe.
Wow.
So
okay.
You've told your job on your W-4, at the end of the year, I'm going to file this way. And so I want you to take out taxes based on this.
Okay.
Now, if you're married, and let's say you put down married with your job, and both spouses put down married, at the end of the year, you have to file a married return or you're going to owe. Because they took out taxes for a married person. And then if you file married separately, that's really a single person. That they
right, that's different.
So when you get to the end of the year, you're going to owe. Another thing that's not taken into consideration is when you're married, your incomes are together. So
right, that's true.
If I put down married and my wife puts down married, my job is going to pay based on what a married person would make if that's the only income that you're going to have in the house. So let's just say that I made $50,000. My wife made $50,000 as well.
Right.
They took out 10% tax. And these are all hypothetical, like just example numbers. These is not real numbers. They took out 10% for taxes, for federal income tax, based on $50,000 and the fact that I'm married. So they're not taking into consideration that my wife makes $50,000 or either. They do the same thing for my wife. They took out 10% because at $50,000, 10% would be our tax rate. But now when we go to file, we didn't make 50,000. We made 100,000. And at 100,000, at 100,000, the tax rate would have been 20%. But since we both taxed at 10%, guess what? Now we owe because we didn't pay enough during the year. They took out taxes, but we didn't pay enough during the year. If you file single, they're going to take out as if you're going to file single at the end of the year. And with you both doing that, now you have options. You can see, well, maybe filing separate will be better for us this year. Maybe it won't be. Most of the time, it won't be. But they're going to take out a higher tax rate because as a single person, they may have taken out 20% at that level of income. Okay, so I don't like to have to owe anything to the IRS at the end of the year, and I don't want to have to worry about them. So for me, for me, I want them to take out as much as possible,
like throughout the year.
Yes, and then this way, hey, I don't care. I don't even care if I don't get a return. I just don't want to have to pay them anymore. Yes. Right. So, the best thing to me, like for me anyway, the best thing for me is to do it that way. Now, some people will come to me and say, hey, well, I'd rather get my money during the year. And that's your prerogative. But if you get your money during the year, don't think that you're going to get it at tax time too.
Right. Like you really have to decide which is best for you.
And you wouldn't believe how many people get their money during the year and then they're still expecting more money during tax time. So like
Right. Of
example,
course they are.
you may see a person that says, and this is going to be the third misconception coming up here, but I'm leading right into it. I may see a person that I'll see their W-2 and they didn't pay like anything during tax time and they're expecting a refund. And I'm
Right.
like,
Of course they
well,
still are.
what are we getting a refund for?
Right.
Because there's nothing to refund. You didn't pay anything. Like, and I like to say this, I'm not going to go to a bank and say, let me take $500 out of this bank account, but I never put money in it.
Right. Not.
You know, that's basically,
I would hope not.
That's basically what they're
Yeah.
doing. So, which leads me into misconception number 3. What somebody else got has nothing to do with what you're going to get. You know, this is one thing that I hear a lot, like, well, you did such and such taxes and they got back this much.
Right. Yeah. I can imagine you hear a lot of that.
They told me they were getting back this much, and you know, like my business is has grown basically through word of mouth. So some of my clients like to say, yeah, they like to brag about what they got.
Yeah.
And they told me you were getting this, and I can come to see you, and you can work your magic. And I'm like, work my magic? Like I don't.
You know, I guess it's like you putting in just any numbers.
Yeah, like
to get money back for them.
I'm like, no, I don't have a magic wand. And if you and I'll say this, when I hear that, I say, okay, let me ask you a few questions before I get into anything. And these questions are: did you make exactly the same amount of money that person made? Did you pay exactly the same amount of taxes that person did? Did you have exactly the same amount of kids that person had? If the answer to all of those questions is yes, okay, then we could talk. Then I can get you what you got. Then what they got. I'm sorry.
Right.
But everything has to be exactly the same in order for that to happen. So that's the misconception right there, that you think that one person's return is going to equate to what your return is.
Right.
So
I don't get it.
It's yeah. And I may have said this already, but I feel as though I need to say it again. If I didn't, I didn't say it like this. What you got last year doesn't mean that you're going to get the same thing this year. You know, things change. Like last year, you had kids, you got a lot more money because they changed the rules around to help boost the economy, or so they say, for, you know, COVID relief. So people that had kids got ridiculous tax returns last year.
Yeah, I didn't get none, of course. So
you had to have kids, you know, but that has nothing to do with this year, you know, because those same rules don't apply. So which brings me to this. Is this is just more of a message than a misconception. Try not to spend money until it's in your pocket. You know, a lot of people, well, not a lot, but one thing that I do hear a lot is, oh, I can't wait to get my taxes done because I'm about to do this. I'm about to do this.
Right, they do.
Like, you don't even know if you're getting a return yet.
Right, you don't know. That's true.
And, you know, you could save yourself a lot of disappointment by just waiting to see what you got and then start making your plans after that. So, you know, this is more of something that I would like, I guess we could talk about when we talk about financial. Things. But it is, to me, like it's a big problem. Like to me, even though I know what I'm doing during, you know, throughout the year to make sure that I don't have to pay at the end of the year, I still approach tax season as if I'm getting nothing.
That's smart.
I just have that in my mind. Like, until I see it in my bank account, it's not there.
Yeah, people are already spending some they don't have yet.
Mm-hmm. So, and the last thing that I want to say about that whole subject right now is, you know, if your tax advisor is giving you, you know, some insight as to how to make sure you don't owe at the end of the year, you know, take that person's, you know, word for it.
Right.
Take their advice and try to do it. I'll go back to, you know, people saying I'd rather get mine during the year, and it's fine for you to you know, like I said, don't expect it at the end of the year, but some of the reasons for why some people want it at, you know, during the year, you know, they say, well, I need all my money because my bills are this and this and
Right.
that. And I like to counter that by saying that, like, we've all been in places where well, I'm not even going to say we all, I'm just going to use myself. And you know this too, because you know me for a long time.
Right, I have.
I've been in places where I ain't really had, like, I don't know how I made it through the year, to be honest with you. Some of the money that I was making, I was like, wow, you know, how did I even make it?
Yeah.
So with making like 1/4 of what I make now, or even less than that, I was still able to, you know, we're still here today. We're talking today. I was able to get through. I kept a roof over my head the whole time. So I'm making a lot more money right now. Like, if I can make it during that time, then I can find a way to pay my bills if the IRS is, you know, as long as the tax man is still getting paid as well.
Right.
It's just that we may not be able to do some of the things that we want to do, but we need to do some things that we need to do in order to make sure that we're taking care of ourselves. You know, there's some things, you know, I analyze, some people come to me for financial advice, and, you know, I when it comes to financial advice, you know, someone like me or any other financial advisor, we have to get all up in your business.
Yeah, I definitely do.
You have to allow us to get all up in your business. And when we're all up in your business, we find some things like, do you really need to be paying for this? Like, you would never imagine how many times I see some things like people are paying for it. They're just automatic payments that they don't use. Like, so many gym memberships. How many times you go to? I don't even go to gym. Well, you know, they're taking out $15 or $20 a month.
More than that, yeah.
But yeah, or they may have some other subscription to something that they're not. You know, so
it's important to have someone. Sometimes to have someone else to look at what it is you're actually spending your money on.
And when
to help you budget.
And when you eliminate those things, those are the things that can help you pay your bills and still be able to pay the IRS, you know, things that you're
that's true.
So I just think that, you know, none of us like to pay taxes.
Yeah, that's one thing I hear people definitely complain about all the time.
And
how much they take out your, you know, your check. It's a big problem for people because you're working and only getting like 2/3 of your check.
Yep.
So it's, you know, it's a tough predicament because you understand you have to pay taxes, but people get upset about how much is taken out.
Yep.
And they don't know where all their money is going at.
But a lot of times, like I just said, some of their money is going to other places where, like, when you dig down into their finances, you'll find that they're going somewhere else that, you know, some of us have habits that we support.
Oh yeah, definitely. We all have something that is like, you feel like you have to have it, but you don't necessarily do.
Yeah.
But you feel like you have to have that, you know, that Starbucks coffee every morning. You know, for $7.99.
Yep. All that stuff adds up. Like, you know, so, you know, when you do that every morning, all day, you know, that's a car payment right there.
Yeah, it actually adds up when you actually sit back and actually look at what you spend money on. And it's hard for people to do that because you feel like, oh, it's just $5 here, $7 here, but it does add up.
Yep.
If you're doing that every day.
Yep. So if you really need to this is another piece of advice for people that don't know me. I don't like to pay full price for anything. So
No, I don't blame you for that. I'm
so
all about rewards and stuff too.
exactly, because that's what
Yeah,
I was
get
gonna say.
credit.
Like, if you're gonna get your Starbucks, make sure you got the Starbucks app and you're getting those rewards, and then you
Right.
start getting free ones.
Yeah.
I think I got rewards for everything that I do.
Yeah. I'm sorry. I have these apps on my phone, and I know it takes up space, but it comes in handy.
Yep.
I mean, if it's a company or place that I'm always frequently at, it makes sense for me to do that. Dave, I wanted to ask you also, because I know you're always involved in so many things. You mentioned a lot of it tonight, but I just wanted you to talk briefly to people about why it's important to build up a wealth, like having different streams of income. I know you mentioned earlier about teaching someone how to become a tax accountant. I guess a side source of income.
Yeah. You talking about offline or during the I spoke about the accountant, like this is like for small business owners, how you can have how you can do your own accounting without having to pay somebody if you're a small business owner that if you want to keep track of, well, mainly just your expenses.
Right.
But so I'll talk about the personal side first, and then I'll go into the business part, because I know you also want to talk about LLCs real quick. But I think that it's good. So a good financial advisor is going to have you save money so that when you stop working, you'll have multiple streams of income coming in. Like not many people have jobs where you have pensions anymore. It's very hard to find jobs.
Right, I hear that too. Yeah.
So, everyone, if you want to rely on just Social Security, when you're in your retirement age, you're not going to have a lot of maneuverability here with your finances if you just are getting Social Security.
Right.
So there's ways that are tax friendly, and there's ways that are, all the retirements are pretty much tax friendly, but there's ways that are more tax friendly. You want to be able to, when you retire, not have to go back to work again. That's what we all want to do. We want to get to an age where we can retire.
Right. I would like that now. But
yeah,
I can retire now.
Yeah, me too. But when you let's just say you did have a pension, or you did have a 401k, and that's all you had along with your Social Security. I have some clients that are collecting a pension and collecting Social Security, but you know what? Social Security is designed so that it would be the only thing that you would collect. So a lot of people, this is kind of a misconception too, but it's also part of the retirement package. A lot of people think Social Security, like they don't ever have to pay tax on it, but that's incorrect, because if you have a pension that's paying you, there's different rules for, if you're married or single,
right?
If you're making a certain amount of money, half of your Social Security, like half of what you make in Social Security, can become taxable. And then if you get to the next level, up to 80% of what you make in Social Security can be taxable. Because if you're making other streams of income, like your pension, and it pushes you over, they have certain thresholds, you'll have to pay taxes in it. So let's just say that you built up you have your 403b, you have a pension, and now you have like a Roth IRA. So Roth IRAs, you don't have to pay tax when you take it out. You can put it in, you're putting money in to this account that you've already paid taxes on. So anything that you earn, it's going to be invested in mutual funds, or, you set up the investments. But when it comes time to take the money out during retirement, now you're going to collect that money without paying taxes, even on the interest that you've earned. You don't pay tax on any of it. A Roth IRA will set you up with tax-free money coming in. So let's just say that you did that. And there's certain limits that you can put into these accounts. But if you did that, you have a pension that you're paying taxes on. You have an IRA or 401b that you're paying taxes on it. You may have to pay some money in Social Security. Well, this Roth IRA could be just enough where you're just getting back the money that you paid in taxes. So it feels as though, that's a way to offset your taxes that you pay in retirement.
Okay.
You don't want to rely, everyone's heard this phrase, don't put all your eggs in one basket.
Right. We have.
You don't want to rely on all your income coming from one place, especially because the way that you can invest it, if it's in different places, you can invest it differently. You may be able to take more risks on certain investments to help you gain more money in one than the other. And you may have some money. It's good to have some money that's in safe investments where you don't really have a chance to lose any money, and it slowly, generates interest or dividends. And
what's an example of what's you would consider a safe investment for someone to start?
So all of these investments, I'm speaking of mutual funds.
Okay.
But there are certain mutual funds that deal with like bonds, which are like super investments. So the mutual funds are like a group of they're like groups of stocks or bonds, or sometimes a mixture of both. But the ones that are not invested in volatile companies, so I mean volatile, companies whose stock goes up and down, it can be here one day and here one day. It may be like a set of funds where it's steady. The gain is not going to be as high, but you really don't have a chance of losing. So you may want to put some money there, some eggs in that basket, some eggs in the basket where you have a high risk, high reward thing where you can actually lose money there too.
Yeah. You got to take some risk sometimes.
Yes. And the older you get, the less risk you want to take.
Yeah, I can understand that.
As you're younger, some risk as you're younger is not always bad because you have time to recover. If you lose money,
right, that's true, you do.
You still got time to recover. The stock market hasn't been great in this last couple of years, but there's still time to recover. Like, if you look back at any 10 to 20 year span, since the stock market was created, you're going to have more good years than bad years. So, and there are going to be some bad years where you lose money, but over a long-term investor knows that money is going to come back. But if you're in your 60s, you're not a long-term investor anymore. You want to make sure.
No, you're not.
You don't want to be losing money then.
You don't want to be losing money.
So,
yeah.
But, setting yourself up with, multiple streams in retirement can benefit you, like when you're retired, because you can offset some of the tax liability that you have from those things. Now, setting up multiple streams while you're working.
Yeah, that's what we need to do. Just to get things started now while you're working.
It accomplishes a few things. I mean, because obviously you're doing it, I'm doing it.
Yeah, you're doing it. I know you were coaching, the girls basketball as well as doing all this the tax stuff. And I don't know if you're still involved doing music, but you always had multiple streams going on.
And I'm teaching now,
Teaching as well. That's right.
So it's good to have the multiple streams while you're working. I mean, like right now, for a few reasons. I mean, one, if you set up your own personal LLC.
Yes, and we can talk briefly about that as well, because I think you're about to lead into that. I just wanted you to give just a few basic tips for people that are interested in starting an LLC.
Okay.
Because I know it does tie in some way to as far as getting the tax part of it right as well.
So and this starting an LLC, it does tie into having the multiple stream of income. Obviously, you want to have LLC for this.
Yes, for that.
So having the importance of, and I'm trying to count in my head real quick before I say this. I have I probably have 4 of them right now.
Okay, all right.
Yeah.
You're gonna make that money.
4 active. Well, they're not all making money, but at least
Right.
3 of them are.
Well, that's good
So,
enough. 3 out of 4 is not bad.
yes. It kind of like organizes the businesses that you're doing. Like, obviously, yes, I have multiple businesses, but I don't want to like intermingle the activities of each business with each other. Like, it's
Right.
a good thing to keep them separate. That's why, like I said, if one of them is doing bad,
Okay.
then okay.
So you say separate, you don't have them under one umbrella? Is that what you mean? They tore all 4 different LLCs?
Yes. And I'm not saying that that's the best thing to do. It's just, for me, it is. You know, there are situations where it is better to, you know, put them all under one umbrella.
But do you have them under, like, as far as their own business entity, like, doesn't have nothing to do with like your social security number or things? It's just,
well, okay.
like, if you were to ever get sued, they would be suing the LLC, right? Not you personally.
So yeah, what an LLC.
Not that I want you to get sued, but I'm just saying.
No, I'm glad you brought it in, because, you know, a lot of people don't know what LLC stands for. LLC stands for Limited Liability Company. So
yes, thank you for saying that.
They're basically talking about, you know, getting sued. The limits on the liability, like if someone were to sue your company and you have it under an LLC, they can only sue, you know, based on the assets of the company. They can't go after your personal assets.
Okay, right. That's important.
That's the limited liability. If you operated your business without an LLC, well, you'd be operating it as a sole proprietor, which is under your Social Security, and everything is tied to your Social Security, so they can go after you. So that's the legal benefit of having an LLC.
Right.
As far as taxes are concerned, I know you just mentioned, is it part of your Social Security number? But for taxes, yes, it is. When you file an LLC, it's attached to your Social Security number. It's its own. It's not its own entity. It's like an extension of you.
Okay.
Although there is some paperwork that you can take your LLC and file it as a corporation, which totally separates it. But and then you would have a separate tax filing for that one as well too. It's not under your, you'd have to file it, file 1120, which is a corporate, 1120S actually for a small corporation. But, setting up an LLC allows you to now, you can get bank accounts, credit card, and you can build business credit under that account. And it's good to generate this, because as a business, if you could generate good business credit, and I have a good example. Like, I don't know how long ago it's been, but a while ago, I had my LLC. I've had my LLCs for the tax LLC for a long time now.
Right, I'm sure.
And several years ago, I applied for an American Express credit card. I did a personal one and I did a business one, and I did them within a week of each other. So I didn't do them on the same day. I think I did one and then I did the business one the week after. So I was approved for both of them.
Wow. Okay.
But
Just the black cards?
Nah, it's just a regular
red card.
Yeah, it's black now, but it wasn't then. But at the same time, like the business one, I wanted to make this point here. The business one, I had 4 times the credit limit than the personal one.
That's something.
The business credit was good. If you have an LLC and you develop good business credit, where things like getting credit, these banks tend to give you more money toward your business, especially you can show your business is in good standing. They will give you more credit. And this is the same company, same card. It's just one is a business, one is a personal.
Okay.
And instantly they checked my business credit and my personal credit. I mean, neither one of them was bad, but I got 4 times the amount of limit on my business one than I did on my personal one.
Wow, that's something.
So, having an LLC, without an LLC, you can't develop business credit. I mean,
Right, you have to have it, right?
Well,
And you got to start from scratch pretty much when it comes to actually starting the business credit.
yep. And in order to develop business credit after you start your LLC, you have to register with Dun and Bradstreet and get a Duns number because.
And people could do that on their own, right? Do they need to go to a financial advisor, or something they could just go online to do?
You can go online and do it. Like if you can get someone to help you with the paperwork, but most of the paperwork is fairly easy to start the LLC on your own.
Okay.
And also Dun and Bradstreet Duns number. I would recommend at least having someone with you when you do the Duns number, because on their website, well, I'll just put it like this: don't pay for anything on their website.
Wow. Okay.
Because they have a lot of credit monitoring. You know about the credit monitoring,
right?
Where they charge you a monthly rate. Like Dun and Bradstreet has things
They'll
set up.
do that. Okay.
They're gonna say you
so
can't get
warning people now. Yeah.
You can't get it unless you pay. No, you can get it for free. You just have to wait it says that you can wait 30 days. You have to wait 30 days to get your number once you apply for it. Or you can get it right now if you pay 300 and whatever.
Right, that's how they get you. Like you say you could either wait or find it another way for free.
And let me tell you this. I just did one from my brother who started his trucking business last year.
Okay. Yes.
And I did it for him, and it said to wait. You could wait 30 days or get it now. I said, we'll just wait 30 days.
Right.
Do you know that as soon as I submitted that application, he had the number like within 30 minutes. So he could have paid to get it right now, or he got it the same day anyway.
He still got it. Wow, that's something.
So getting the Duns number, and then getting the Duns number, and then there's other things that you have to do to make sure that your credit is being reported. Your credit is being reported to Dun and Bradstreet, just like your personal is being reported to Experian and TransUnion, Equifax. So going back to when I applied for those credit cards, the first personal one checked my, Experian, TransUnion. It checked one of them or maybe two of them, where my business credit was checked with Dun and Bradstreet, and I got the alert saying, yeah, your Duns number was just checked. I remember seeing that. And, it's good that I had everything, separate.
Right. Good, you did.
For those, that want to use credit responsibly,
right? Yes.
You can get a lot of credit, and you can get business lines of credit. A few years ago when we had the pandemic and people were getting the PPP loans and the other grants. Right. If you didn't have an LLC set up, there were certain grants that you couldn't get. Now people started setting up LLCs to get the PPP loans, but they were. But there was a couple grants that I got. I didn't get any PPP. I didn't even apply for one, but I did apply for some small business grants. And if you didn't have an LLC that was active for at least a year, you didn't qualify for these grants.
You had to. But as far as the LLC go, you have to show proof that you was making a profit. Because I know that's hard as far as getting a loan from the bank, for example. They want to see that you were making a profit for like 2 years.
Well, it depends on like the SBA loans, they didn't really need you to make a profit. Okay. But yes, other because the Small Business Association loans, the government ones, they didn't really need to see that. Okay. They just need to see that your business was in good standing. Now, during those pandemic loans, they wanted to see that you made a profit, and then because of the pandemic, your profit was reduced.
Right, it was.
But having the LLC active in certain situations, because there was one of the, I forgot what it's called, EDA. I don't remember what it stands for, but it's a New Jersey Economic Development Association, I think is what it stands for. They gave out a grant just for having a business, and having a minority owned business, it was like, here, we're going to give you $15,000. Just apply
Just for that.
Within this time frame.
Being minority.
Yep. And
so we be needing the most help too. So I get it.
Yep. And there's a person that I know that applied for it, but his business wasn't in good standing. So, and I know you probably heard me say good standing a few times, and I'm going to explain what that is in a minute. But the business was not in good standing, so he ended up not getting the loan. I mean, not getting the grant. And at the time, it needs to be in good standing when they make the decision, or else, because you can get your business in good standing. Like if it's not in good standing, you can go online and get it in good standing like right away.
Okay.
But they made the decision. He got it in good standing right away, and then they still didn't give it to him. So, but I mean in good standing. When you set up an LLC, you have to get a tax ID from the IRS. That's free. You go into irs.gov, register for EIN, and then just fill out all of your information. You're going to put in your social security number. At the end of this application, it takes you about 5 minutes probably. You want to make sure that, first of all, do not do this on your phone.
Okay.
You're going to do that. My recommendation is to do it on a computer. When you get to the end, save the PDF to your computer, or else you have two options. You can have them mail it to you, or you can save it. I would say save it, print it, keep it as a digital file, because if you lose this letter, you will never get it back from the IRS. It's I'm not going to say never, but it's very difficult to get this.
Wow. Okay.
So save that file to your computer. After you get the tax ID, the EIN number, now you're going to go to the state that you're going to register your business in. And this fee is pretty general for all 50 states. Because I've registered businesses for people in not all 50 states, but I got clients in a lot of, in at least 20 states. But you're going to now register and incorporate your LLC with the state. You have to do it. You have to do articles of formation with the state. And it's going to cost you $125 to pay that state. So you'll go in, you'll put in your EIN, all your information, fill out their application, pay them $125. And now you have it with the state. And after you get your state formation document, you'll just continue to register it, and you're completely registered. So there's 3 documents you should have: a IRS EIN, the state business formation document, and then your registration document.
Right.
Now, every year for the state, so the IRS, you never have to pay them anything to get the EIN, but the state you do. Every year for the state, you have to pay. Like here in New Jersey, it's $75. What it's called is an annual report. And basically that's your time to see, if there's any officers that have been added to the company, if your address changed, anything like that. You have to pay the $75 charge. Just even if nothing changed, you have to pay the $75 charge just to say nothing changed.
Wow.
Okay. If you do that, your business is in good standing. Your business cannot be in good standing if you neglect to do that. So if you neglect to do that, they may let you go to the next year, and then they'll get, you owe us 2 years. But they're not going to let it go into a third year. You will then get your business revoked from the state. And if
is there a certain checklist or something that people can look at to make sure that they're doing certain things, especially if they don't have a financial advisor, so they can know, so they don't have their businesses revoked?
Well, there's not a checklist. There's only one thing you got to do: pay that $75, pay whatever the charge is in your state. They're going to give you the notice. I was going to say I probably have one because I just did one. But they're going to send you a notice 2 months before you need to do it. And it's just
okay. So you have a notice,
go online, and they even have it where you can get a text alert and an email, so you can check when you're signing up, where you can get an alert. So you could have my clients that I set those up for, They allowed me to be registered agents on their
Right.
account.
Okay. Yeah.
So when those notices go out, they mail it to me too. So when I get it,
Okay. That's good.
I just take care of it for them, and then I just say, okay, you owe me $75. Okay,
Right.
you know,
You know how to get that money.
well, actually, I don't even get paid for that. They're just giving me the $75 that I paid to keep their business.
Right. That you paid for them. Yeah.
Yeah. So I have certain clients where I know that, I don't have to worry about it. I just do it for them.
Right.
So I'm not even like charging them for that because it's just going on there. Nothing's changed. Here's your $75.
Right. You want to make sure they don't get in trouble. Pretty
Yeah.
much.
So
Yeah.
I have some clients that I actually do that for because their documents get mailed to me, but it gets mailed to them as well. So all you gotta do is look out for that document or look out for the message, and then just pay that every year. That's the only thing that you have to do. Like if you want to change any information during the year, you can go online to the same system and do it, but you'll have to pay like a $25 or $50 charge during the year to do it.
Okay.
But in order to keep your business in good standing, that's all you have to do.
Yeah, so I hope people out there listening, it's very important to keep your business in good standing because you want to keep your business going.
Yes. And if you have a business in which you're selling things, you got to pay quarterly sales tax. So there's another thing, So this is where like having someone would help because the average
that's
person
true.
is not going to be thinking about this stuff.
Right. As I'm saying, it's a lot of little things you're not thinking about because you're so busy trying to, promote the business and sell. You may not think about all of the other things. And I actually had another question regarding, I know we spoke briefly about the 401k, but as a business owner, that is something that someone can have set up as well. They can have, and I know you mentioned the 401b. I'm not sure what that is, but is it something things that people should have set up as far as retirement? Because I know if you have your own business, people may not always think about the fact that they should have things like that set up as part of the list of things to make sure you have checked off.
So let me I'll clear one thing up because I did say 403b. So 401k.
403b, okay.
So 401k, 403b, and 457, I guess it's B as well. They're all the same thing. So 401k is like, the average person is working for a company and it's a retirement account that you can, put aside.
Right.
403b is the same thing, but it's designed for teachers. So as a teacher, I have a 403b.
Oh, okay.
457 is the same thing, but it's designed for state employees. Like it could be police or, like public servants. So the 457 is like, anybody that has a state job, it's the same thing, but it's just called 457. So
okay.
All of those things are the same thing. Now, as a business owner, you can get, there are, personal 401ks that you can get. Now, the fees involved, there's some fees involved that could be heavy. Some, if you get the right one, you may not have to pay many fees. But for the most part, a lot of business owners are going to get an IRA, just because of individual retirement account. It's the same thing.
Okay, that's what I wanted to know.
See, IRA is the same thing. It's owned by you. Like 401ks, 403bs, 457, they're pretty much like owned by the company that you work for, or they're managed by them. So you have to follow their rules. So with those accounts, 401, 403, 457, you have to be working for your account, and the money has to come in out of payroll deduction.
Okay.
You're not able to add money to that account outside of when you get paid. Where IRA, you add money whenever you feel like it. You can put money in there whenever. And then when you're filing your taxes, you can take a tax deduction up to 60. This year, 6,500 of what you can, is the maximum amount that you can get a tax deduction for.
Okay.
The Roth IRA, what I was telling you before, you don't get a tax deduction for that, but that's the one where when you take money out, you can, you don't have to pay taxes on.
Okay.
So for a small business owner, you can go, like most of the clients that I have that are truck drivers, they go with the 401k option or the personal 401k. Because the limits of to what you can put in it every year is higher. So they're going to take a bigger deduction. I have some truckers that are making like 250, 300,000 a year. And they want to be able to put $22,000 a year into the 401k. So you need a 401k to do it, because an IRA, you're not going to be allowed to do that. If you can get penalized. So
that's interesting.
Average business owner, like if I didn't have a 403b with a job, and for me, I would probably go with the IRA, because I'm going to put in, my maximum is going to be a little bit different than someone who's making a lot more money. So all of these things are basically the IRS, except for let's take the Roth out of it. But these things are the IRS's way of saying, okay, you're going to put this money aside. We're going to allow you to deduct it. So we're going back to, a deduction off of your taxes. And you don't got to pay tax on that money right now.
Okay.
You could pay it later. So one thing I will say before I make my next point is, if you have this money in here and you take that, you're agreeing to, you're basically telling IRS, okay, I'm putting this money aside. I'm not going to touch it until I'm 59. Well, they say 59 and a half years old. I always like to just say until you're 60 years old.
60, yeah.
Make it easy. If you take the money out, whenever you take the money out, you're always going to have to pay taxes on it. It's going to be added to your income. But if you take it out before you turn 59 and a half or 60 years old, you will be penalized 10% of what you took out. You're going to get penalty.
Yeah, it's always some penalty.
But that's because they're, they want to be able to hold this into an account for a long time. And
yeah, I understand that.
It's designed for that. So that's a misconception. Number two, one. A lot of people think they could take this money out.
Misconceptions, yeah.
Yeah.
People have a lot of misconceptions when it comes to money.
Yes.
And taxes and finances in general, which is why people should reach out to people like yourself to help guide them through that. But I wanted you to share an on the Q tip that you may have for the viewers. It can be about taxes, or it could be about just building wealth, or being a business owner, whatever you would like to share with the viewers.
Let me give two.
Oh, snap.
Number one has nothing to do with taxes. Financial wealth. Number one on the Q tip is make sure you watch On the Q every other Wednesday.
That's right. Tell them.
That's number one. Make sure that you tuned in.
Yes, tune in. Make sure you watch and comment and share, subscribe, all of that stuff.
So that's number one. I got to throw that in there. I think what I like to say about financial wealth is the reason I became a teacher is because I went into teaching because I wanted to teach our young people financial literacy, and teach them the value of saving money. I wanted to try to embed this into the young minds now, so that when they grow up, they're able to do that. So I think that educate yourselves.
Yes.
On how you can become more financially stable, and educate yourself on things that you need to do to make sure that that you're not working. Nobody wants to work until they're 80 years old. No one wants to be sitting at Walmart greeting people. You should be relaxed. No. So educate yourself, but then pass that knowledge off to your kids, because a lot of us are in the situation that we're in now because it's not any fault of our own. It's just that we were never educated.
Right. That's a big thing.
We didn't know. Like, we're finding out now, some of us are in our 40s and we're finding out now, like, wow, I wish I would have done this 20 years ago.
Right. You don't know.
So my biggest thing is like, I think it's very important, especially for our people,
Yes.
to make
Hey,
sure.
Auntie. My aunt is on watching us.
Oh,
Good
okay.
evening.
Hey, Auntie. Um, um,
Yes.
make sure that you educate yourself. Try to find yourself a good financial advisor that you can trust, that you can get
Right.
information from, and pass that information on um,
Yes.
to our young people. We really,
Mhm.
like, in order for us to have generational wealth, we
Mhm.
need to be educated on the things that we need to do to make sure that we have it. Um, make sure that um, your family is protected from things. Like,
Right.
I'm a big advocate of life insurance, and
Oh,
um,
yes. Hmm.
like, I had a family member recently in December that passed, and there was no insurance. So, our families are, it's hard on the
It's
people that
hard.
leave behind,
Yeah.
So, I'm an advocate of that. I mean, it's not for everybody, I
Right.
understand that there's going to be situations. So I'm not saying that, hey, you got to do this, but um, if it's possible, you know, make sure that your family's protected from,
Yes.
from you not being there. Um,
Right.
so that's a big thing there as well. But I just feel as though that I can't stress it enough. Having the knowledge, like,
Yeah.
if you get the knowledge, share it.
Yes.
Not
That's what we're doing tonight with you
yes,
sharing the knowledge that you have.
yes. I think
Very
that's
important stuff.
important because, as a people, like, I would like for us to all be more united, and
Yes.
like, part of.
Yes. We have a comment as well. She said, "Good evening, beloved Valentine." She said, "Thanks for sharing this very important information tonight."
Oh, you're welcome.
Yes.
Oh,
I'm so happy to hear, that it's been beneficial to someone.
me too. Because, like I said, do you know how powerful we could be? Like,
Yes.
the biggest thing that hurts us as a people is the fact that we're not together all the time. We're
Right.
not
We're not.
we like, somebody gets some information and they don't want to share it because, oh, I don't want this person to get. But
Hmm.
you, like, if we're all getting better, then all of us could be better
Could be
together.
better. Yeah. Together.
Um.
Yes.
So it's
Hmm.
I just, if anything, that's the message that I always want to portray. I think that's why my clients
Hmm.
like working with me, because um I'm always sharing everything with them. When they get their taxes done,
Yeah,
they're
you do.
getting some education too.
Right. You're going to teach them something.
Yep. You know what? They teach me
Yeah.
too. We learn
Right.
from
That's true.
them.
It's an exchange of information.
So I just think that, yeah, I think that that's, to me, the most important thing. Like,
Hmm.
we need to know, put, um educate ourselves on what we need to do in order to improve
Yes.
our finances, and then we need to share it with everyone, and we should,
Especially that. Yeah.
we should want everyone to, like, I want everybody to eat,
Yeah. I
so,
feel the same way. But first, you got to be able to yourself
mm-hmm,
before you can help the next person.
yep,
So, Dave, I want you to share what's next for you because I know the girls' basketball is over with. So I know you're still teaching and tax season. As people aren't aware, like you said, April 18th is the deadline, so people can uh still reach out to you as far as that. If you're still, which I know you're still doing taxes for people.
oh
But
yeah,
what else do you have coming up? You know, post tax season.
vacation. uh,
Yes, I hear
but,
that.
but I mean, taxes, since the pandemic, it's the whole dynamic of taxes has changed a lot for me, because
Mm,
it used to be a time where I would be, April 15th would come and I'm done with taxes and I don't
right,
have
you
to
be
do
done.
it.
Right.
But since the pandemic, I was still doing taxes last year in December. So
Wow.
so more people have been filing extensions, which
Mm,
gives you
mm-mm.
until October 15th. And then some people are late filing. Here's another misconception that April 15th is the deadline to file taxes. Technically, that's what they say. It is the deadline to file taxes. But remember what I said before about you're prepaying your taxes throughout the year?
Right.
Well, if you're already paid and IRS knows that you're paid, then that deadline doesn't really mean anything at that point because you're already paid up. So it's the deadline to even though they won't say this, but this is what I say. It's that deadline is the deadline to pay.
To pay.
If you owe, that's when they're going to start the clock for, penalties and interest. So with that being said, what's next is I have people that know this as well, and they're not like in a rush to get their money. So they'll file it later and, they'll get their money later in the year. So I'm still filing taxes throughout the summer.
Right.
And, the tax season has been like extended.
Yeah.
So,
really.
So it's really that, I've been getting a lot of clients recently that, hey, I haven't filed in 3 years. So,
wow.
If you're due a refund, you have 3 years from the date that it was due to file your tax and get that refund.
Okay.
If you don't file it by that date, so let's just say it's 2023 now. So for 2019's taxes, 2019's taxes were done in April of 2020. If you haven't filed 2019 and you're due a refund, well, you have until this April to do that, or else they won't give it to you. Now, the IRS, on the other hand, if you owe them money from before that, they can always go and take the money from you.
Oh, yeah, I believe that.
So yeah, that what's next for me is I'm going to keep doing this.
Keep doing that, making your money and giving knowledge out to people, helping people.
Yeah, that's so nothing's going to change. But when I get the opportunity to travel, I'm traveling.
Oh yeah, I know you will. That's on my list as well. So how can people contact you? How do people link up to you, even now for taxes if they're interested?
Okay, that is.
Do you have any social media handles or websites that you would like to share with the viewers?
So yeah, this has been, and I know I spoke to you kind of offline about this.
Right, you did.
It's something that I've been going back and forth with for a little while now, and I think I'm finally going to do this. So I've never advertised online. I mean, I do have a Facebook page.
Yes, please.
I mean, I do have a Facebook page, which I never look at, but I think that now I'm going to share this. My business has grown from, just doing Ford taxes to, I don't even know how many clients I got now, but a lot. It's been just word of mouth, which I enjoy. I think that word of mouth has been the best friend for me because it gives me more of a personal connection with the clients that I take on. So, but I think that, as a person that, I teach web design at my school too. I need to design myself a website and link up.
You definitely do.
And I think that I'm going to do that. I have the website already there. I just haven't put it up online yet. I'm paying for it every year, and
that's a shame,
broadcast. I know, but I just want to keep my, keep the name Legacy Tax Services.
Right. Yes.
So right now, I don't know. I can share.
Well, you can share it as far as on the comments, so that people can follow you and know how to reach out to you for your services.
Okay, because I can do that. I can add my email address.
Yes.
So right now, I do have an amazing system. After doing this for a long time, I developed.
I'm just asking, are you in New Jersey?
Yes, I am in New Jersey.
Yes.
But even though I'm in New Jersey, I file taxes in multiple states. I have clients
from
here to California, Arizona, so I have
all
clients,
over.
but I'm physically located in New Jersey. Um, so yeah, I can share. I think I'll go in there in the
Yeah,
comments.
you can share because people
Um,
definitely will need your help.
so how do I? Oh, hold on a second.
Or maybe after after the broadcast, you might be able to add
Yeah,
it. Oh,
yeah.
my aunt was asking how long you've been a tax advisor.
Since 2004.
Yeah, it's a long time.
Yeah, this is my 20th year doing tax.
Wow.
Um, and like I said, it just started off with me just doing my own taxes. I had a
Hmm.
person that trained me was an IRS auditor, and he used to do my taxes. And when he before he passed away, he gave me a couple clients, and he gave me a lot of advice, and I took it. And one of the
Hmm.
biggest things that he told me, he said, make sure you help our people.
Right.
We need
That's
it.
right.
And that's what he did. So, as far as like, I could share my, email address. I have a wonderful system now, which allows, with the mobile app and everything.
Right.
Um,
And I've used it as well too.
mhm.
So
It's
it's convenient to be able to have everything in one place.
Yes. So I have a secure, a secure way of transmitting data. Like we don't have to do anything through email, because that's one thing. And
Yeah.
you know this before. I hated to have to send people emails. I would always have to put passwords on everything.
Where all the passwords on there. Right.
Um, so, I have a secure system, the past few years, and it allows me
Hmm.
to interact with my clients. Like it's kind of like having your own little social media, because you could send comments through me, through the app and everything. So it allows me to organize things a lot better as well. So I think I was afraid of growth. I don't want to say afraid, but I was
Hmm.
comfortable where I was. But
Mm.
now I can see the value in expanding. So wow, 50.
Yeah, you had to. Oh, wow. I'm just reading what she wrote.
Yeah, and yeah, the person that trained me at
Wow, God
the
bless
time,
her. Wow, it's a long time.
yeah, I think this guy was doing it for
51 years.
something similar to
Mm.
that. I know he was about 82 when he passed on.
Mm.
So, um,
Long time.
so yeah,
Mm.
we could share. I could share my, share the email address in the comments.
Yes.
And you have my email address, right?
Yes, I have all your information as well. So
Okay.
even
And
though I work with you with taxes, I know I can always reach out to you for different financial
mhm.
information advice.
And that's another thing too. Like um, along with my tax preparation services, I also,
Hmm.
you can always reach out if you have any other questions about anything else as well.
Yes.
Um, so, I mean, I was going to say my tax email, my name of the company is Legacy Tax
Yeah.
Services. Um, and once I activate my online account, it'll be Legacy
Hmm.
Tax Services NJ.com, so it'll be like, D Sweatte at Legacy Tax Services NJ .com.
Right.
But
You need to get on that
but
ASAP.
so
Hmm.
um but as of right now, I use the Gmail. It's Legacy Tax Services NJ
Okay.
at Gmail. Um so
Yes, and you can, like I said, add all that information.
yeah, I
So
would
we're
do
gonna we're gonna sign off
that. Okay.
for tonight. I think we had a abundance of information for the viewers. So
All
I
right.
just want to thank you again, Dave. For coming on. I've known you probably over what 10 years now, but I'm
At
assuming
least.
it's around that, or at least 10 years. And
Yeah.
you've always came through. You've always been open to sharing the knowledge that you had for others. So
Hmm.
I appreciate that. Okay, beloved Valentine, she wrote that Legacy Tax Services NJ at gmail.com.
Yeah, that's it.
So that's it. So thank you for that, lady, for putting that on there, helping him out, helping the brother out. But again, I just want to remind viewers to keep sweating yourself to a healthier self. That's my motto for
Hmm.
on the queue. And I'm just feeling thankful. It's mid-March. Spring is here. This is the time, as I always say, to blossom.
Hmm.
It's a new start. So
My
it's a new
birthday too.
season.
My
Oh, yes. Happy pre-birthday. Yes, love you too.
And
Very welcome.
I just want to once again thank you for having me and giving me a break from doing
Yes.
taxes. This is a much needed break, taking
Yeah.
the stress off me. It feels
Right.
good to talk about it instead
Mm-hmm.
of sitting here just crunching the
Yeah.
numbers.
Well, I want to say happy birthday to
Oh,
you.
thank you. And thanks for giving me the opportunity to come on and share,
Yeah.
knowledge. I definitely
Yeah. Thank
appreciate
you.
everything you're doing as well.
Yes. Thank you. I appreciate that, brother.
All
So
right.
we're gonna sign off for tonight. Thank you guys for all coming on and joining, and all the comments. Make sure that you share this live with your viewers, as well, your followers, and subscribe also to the On the Q Productions YouTube channel. I can put that on the comments as well. So
Okay.
everyone have a good evening, and God bless all of you.
All right. God bless you. Bye-bye.